Hello students. In present video, I am going to explain about second problem from accounting equation topic. I am taking this question from Kalyani Publications. Let us see the question first. Prepare accounting equation on the basis of the following. First point, Rahim started business with cash 20,000. Second, Rahim purchased furniture for cash 2,000 rupees. Third, Rahim paid rent 200. Fourth, Rahim purchased goods on credit 3,000. Fifth, Rahim sold goods for 3,000 rupees on cash. In brackets, cost price of these goods is 2,000 rupees. So this is a solution. Accounting equation is equity is equal to assets. Equity means liability plus capital. So accounting equation is liability plus capital is equal to assets. First point is Rahim started business with cash 20,000 rupees. We are preparing accounts in firm's books. So think from firm's point of view. Owner's name is Rahim. To start this business, Rahim brought 20,000 rupees cash. So to the firm, capital is coming from the owner. So asset side, cash is affected. 20,000 cash is coming. So asset side, cash 20,000 rupees. And equity side, capital is affected. 20,000 rupees capital came. So equity is equal to 20,000, asset is equal to 20,000. So equity is equal to asset. Accounting equation is satisfied. Next, second point. Rahim purchased furniture for cash 2,000 rupees. Purchases are of two types. Firm may purchase fixed asset or goods, and fixed asset may be purchased for cash or on credit. Goods also same, for cash or on credit. In question is giving that Rahim purchased furniture for cash. Furniture comes under fixed asset, no? So fixed asset is purchased for cash. So to the firm, from supplier, fixed asset is coming, furniture is coming, and from the firm, cash is going. So this transaction is affecting only asset side. So one asset, cash, is decreased by 2,000 rupees. Cash is decreased with 2,000 rupees. Another asset, furniture, is increased with 2,000 rupees. Equity side, there is no effect. No change in capital, no change in liabilities. So final result is liability value 0, capital 20,000 rupees. Cash 20,000 minus 2,000, 18,000. Furniture 2,000. Finally, equity is equal to 20,000, asset is equal 18,000 plus 2,000, 20,000. So equity is equal to asset, 20,000 is equal to 20,000. Accounting equation is satisfied. Come to third point. Rahim paid rent 200. So this is firm. To building owner, we are paying 200 rupees rent. So from the firm, cash is going 200. Asset side, cash is affected, no? Cash is decreased by 200 rupees. Asset side, cash is decreased by 200. And equity side, capital will be affected. Accounting equation is equity is equal to asset. Nothing but liability plus capital is equal to asset. So there is one extended accounting equation, that is liability plus capital plus income minus expenditure is equal to asset. Because capital, owner's money, there is one income. Finally, this income belongs to owner only, no? So to capital, income we should add. And if firm incurs any expenses, finally owner has to bear that expenditure. So from capital, expenditure we have to subtract. So to capital, income we should add, expenditure we should subtract. So here rent is given. To the firm, rent is an expenditure. That expenditure from capital we have to subtract. So capital is 20,000 rupees minus rent 200 rupees. Then final amounts are liability value 0, capital 20,000 plus 200, 19,800. Cash 18,000 minus 200, 17,800. No change in furniture, no? Furniture value 2,000 rupees. So equity side 19,800. Asset side, cash 17,800 plus furniture 2000, total 19,800. So equity and asset is equal same, 19,800, 19,800. So accounting equation is satisfied. Next come to fourth point. Rahim purchased goods on credit 3,000 rupees. As I said earlier, purchases are of two types now. Fixed asset may be purchased or goods may be purchased for cash or credit. In present bit he is giving that Rahim purchased goods on credit. So goods are purchased on credit. Fourth point, from supplier, firm purchased goods. So goods are coming into the firm. And this is credit purchase now. Cash is not going. So asset side, one asset known as goods is affected. Goods value is increased by 3,000 rupees. In fourth bit, new asset goods is increased with 3,000 rupees. And firm purchased these goods on credit. So the seller becomes a creditor to us. In future we have to pay the money, no? Creditor is a liability. So a new liability is generated. Liability value 3,000 rupees. So liability is increased by 3,000. Goods are also increased by 3,000. Equity is increased by 3,000. Asset is also increased by 3,000. Final result is liability 3,000. Capital 19,800. Here cash 17,800. Furniture 2,000. Goods 3,000. So equity side, liability 3,000 plus capital 19,800. Total 22,800. Asset side, cash 17,800 plus furniture 2,000 plus goods 3,000. These three amounts total 22,800. So equity is 22,800. Asset is also 22,800. Accounting equation is satisfied. Next, fifth point. Rahim sold goods for 3,000 rupees on cash. Goods value 2,000 rupees. Firm sold goods to customer. Customer name is not given, imaginary name C. So we sold goods for 3,000 rupees. Sales amount 3,000. This goods value is 2,000 rupees. This is cash sale, no? Means from customer cash is coming to us. 3,000 rupees cash is coming and 2,000 worth goods are going. So in fifth bit, 3,000 cash is coming, no? Cash is increased by 3,000 rupees. 2,000 worth goods are going. So goods are decreased by 2,000 rupees. There is no change in furniture value. So asset side, cash asset is increased by 3,000. Goods asset is decreased by 2,000. Final effect is asset side, there is an increase of 1,000. 3,000 minus 2,000, 1,000. And equity side, goods value 2,000. We sold these goods for 3,000. So there is a profit of 1,000 rupees. That profit belongs to owner, no? So to owner's capital, we should add that profit. To capital, 1,000 rupees we should add. Then the final amounts are liability value 3,000. Cash 17,800 plus 3,000 is equal 20,800. Then furniture 2,000. Goods value 3,000 minus 2,000, 1,000. Finally, equity side 3,000 plus 20,800 is equal 23,800. Asset side, cash 20,800 plus 2,000 plus 1,000, total 23,800. So equity 23,800 is equal asset 23,800. So finally accounting equation is satisfied. So this is the end of present video. Hope this video is helpful to you. Thank you.